Okay, good afternoon everyone. So we should get started. Hopefully you are here to hear about revolutionizing North American open banking. And my clicker's not working. Okay, let's do it that way. Right, so I am Joseph Heenan. I'm a confusing person that wears two hats, so I'm wearing a t-shirt with the wrong brand on it. In my role today, I am the Standards Specialist and Certification Director at OpenID Foundation, and in that role I interface with lots of open banking and other ecosystems around the world that want to or are using various OpenID standards.
Thanks, Joseph. John Paul LaClair. I am the head of product for the Financial Data Exchange, and slightly a similar role, Joseph, right? The actual core technical specification for data exchange in addition to a certification program that we're building out.
So we're going to talk a little bit about the need for open banking before we actually talk about what's going on in North America, and just what role open banking is going to play and just how it's evolving. So appreciate this slide is a little bit dense, but hopefully it works. So where are we? Didn't realize I was going to have two monitors. So where we are today, we're over on this left. We've got screen scraping. People are sharing their credentials with the fintechs and so on. It's not a good system. Banks don't really know what's going on. It can trigger fraud systems, blah blah blah. And in the US, we're just at this stage where we're starting to talk about open banking. Other ecosystems already have it, and then we expect this to evolve on to open finance and then open data and getting all the other ecosystems into it. So the kind of key challenges we see with this is just banks kind of recognize the need to move away from screen scraping, but they're not necessarily sure exactly where to move to. They obviously recognize that APIs have got to fit in the solution somewhere. Screen scraping just doesn't work well for anyone. But that whole evolution, it impacts the whole ecosystem, and the consumers have to get used to a different way of doing things, essentially. So there's a lot of moving pieces and things that have to come together for this to work really well.
And the exciting part here, Joseph, I suppose, if you think regulation is exciting, is that at least in North America, we've been operating for the past 5 to 10 years in a realm of no regulation relative to what could standardization might look like when it comes to consumer permission sharing of their data. And just recently, both in the United States and in Canada, as recently as last fall, we started seeing some of our regulators in both of our jurisdictions provide some context of what was potentially going to be required. And the next few slides are very text heavy, I apologize. So feel free to take a snapshot, but I'll take a few minutes here to talk about how there's things that are shifting from a regulatory perspective. Oftentimes in the world of financial services, from a value proposition perspective, there's a carrot and a stick. And oftentimes the carrot, the thing that motivates that to move, is the end user. There's a customer who's paying a bank to accomplish something. There's a problem they're trying to solve, financial wellness that they're trying to achieve. That's where banks come into play, and they build trust and risk mitigation tactics around delivering those services. But many times, safety and soundness is necessary, and that's where governments come into play to provide some regulatory guidance. And when it comes to open banking, we had a realm of the wild, wild west in the United States, and what we've realized is that there were some areas that haven't been answered yet by the market. So just last fall, the United States' CFPB, Consumer Financial Protection Bureau, has started to activate a dormant part of Dodd-Frank, which was passed, long time ago, called Section 1033, which was designed to provide them some enforcement authority on actually having the ability to guide a path forward. And what they started realizing in this space was that they wanted to recognize that the marketplace had a balance. There was an element of what was already being solved for by industry. So they didn't necessarily want to follow suit of other jurisdictions around the world of being overly prescriptive. They realized that there was some really tremendous progress already being made by the ecosystem itself. So from a scoping perspective, they realized that data and the way in which it was actually being exchanged was really important. And things around data structure and data format and the actual data elements themselves that kind of get exchanged on the payload were areas that they could provide some guidance. And some of the items on this screen that you're going to see is that they really wanted to provide some specificity on the type of products that were going to be covered. So data providers, traditionally financial institutions, but not exclusively. Digital wallet providers are also called out as a data provider within the rulemaking itself as well, will have to comply with enabling the exchange of information, leveraging developer interfaces, kind of technology agnostic language when it comes to APIs. The other piece of it was realizing that there's not only responsibilities of data providers, there's responsibilities of third parties. So these are entities that are intermediaries like data aggregators, Plaid, MX, Envestnet, Finicity, but also third parties. See the big recipients like Intuit or Rocket Mortgage or all these other organizations out there who are really creating distinctive value propositions. And the other piece of this was we realized that there was going to be now some timelines when it came to play, when it came to sensing some urgency around when might banks must actually start putting things into production from an API perspective. And they provided 4 tranches of time based upon asset size. So the largest banks, which is approximately the top 10, have 6 months to comply. Without getting too detailed into regulatory world, there's a whole rule process in the United States about how this happens, but the final rule isn't finalized. The final rule is anticipated to come out this fall. So hypothetically, it's dropped at Money 2020 in October, and it hits the Federal Register in November. The big banks have to comply with this rule by 6 months. The next tranche is 1 year. But the whole part here, without spending a ton of time, is that now there is actually an impetus to make all financial institutions in the United States be able to evolve away from screen scraping, which Joseph was talking about, to a much more technology-driven version with APIs. Canada is following suit. Their path is a little bit more discreet as far as some of their requirements, whereas the CFPB is really trying to acknowledge some of the market forces. The Canadian landscape is trying to create a holistic ecosystem, very much pulling from other jurisdictions like the UK and Europe. But what they're really focusing on is having a very clear view of the data that will be required to be within scope from an exchange perspective, in addition to the idea that there will be a single standard that is required to adhere to. So if you were in Joseph's session earlier today, he talked a lot about the concept of interoperability, essentially from a technical perspective. That's obviously plug and play. The Canadian landscape is much more evolved around that. So a little bit of quick information about the regulatory rulemaking. Have a lot more to share later. But there's this other part here, Joseph, where there's actually these bodies out there that are trying to help solve the industry's problems going forward.
Yep, thanks. So let's talk a little bit about what the OpenID Foundation actually is. So we're a non-profit open standards body. We want to help people use their identity wherever it is. Probably some of you saw the 10-year anniversary presentation earlier, which explained a lot of the history of OpenID Connect. But since OpenID Connect, we've evolved into running or creating these FAPI standards that are used by the open banking ecosystem. They've been adopted by those governments that you can see on the slide in one way or another. And we've got an awful lot of organisations on our board, some of the big names in tech, but importantly the board don't get any say on what actually goes into our technical standards. We have technical working groups. Anybody that's a member of the foundation gets an equal vote, so you pay $50 or whatever it is to be an individual member, you get exactly the same vote that Visa or Google get, who pay an awful lot more than that, I can assure you. Our FAPI standard has seen great adoption in open banking around the world. Pretty much anywhere where regulators have actually picked a standard, they've picked FAPI. There aren't many other choices out there. We've seen some weird stuff in Europe with the Berlin group, and Europe hasn't really got what I would call interoperability in their open banking ecosystem. There's a lot of banks doing different things, and that's possibly the way we might see the US going as well, as the regulators there have been a little bit less prescriptive than we might hope for. But FAPI just adds this security layer onto OAuth 2 that just, it's a blueprint for how to actually do things, whereas OAuth is a toolkit that you can pick bits out of and you can do lots of things in different ways, but FAPI actually pulls that together, says, hey, you want to do OAuth in a way that's secure enough for financial transactions and is actually easy to interoperate with for all the fintechs. FAPI is what you do. Really no other shows in the, or game, I've lost my metaphor now unfortunately, but yeah, we're the only show in something.
I don't know it either, Joseph, but I think the part here too is that there's a whole set of different standard setting bodies that exist across the globe, and then certainly more explicitly those that are here operating within the North America continent. So financial data exchange complements a lot of the work that OIDF is doing, and we think of ourselves as collaborating together, right? So FDX was founded about 5 years ago at the kind of merging of two different efforts. A lot of the big banks were trying to solve for screen scraping. A lot of their customers' credential pairs were in the markets, in the dark web, and that's not a good posture from a cyber perspective, an InfoSec perspective, and they didn't want to shut it off, per se, because customers were demanding the use. They needed to find a new way. And at the same time, the small group of fintech companies created this thing called Initiative X, which they realized screen scraping wasn't good for them either, because it was costly. Data in a specific web interface would often change its location, so that would break the actual bot's ability to capture information. Blockouts. So it was really bad for both sides of the ecosystem. And the realization here is, hey, we're solving a common problem for an end user. Why don't we work together on solving this? And that's where FDX was born. And our membership is about over 230 member organizations across the United States and Canada. And it's a mixture of banks, credit unions, technology core providers, data aggregators, fintechs, because the belief here is that the whole ecosystem is swarming around solving those common problems. I know, Joseph, you alluded to this a bit moment ago, but we love using this truck analogy as far as how the market standard is actually created. We do believe that there's a role for the government and for the industry. And with the industry, we drive a little bit of the how. Government bureaucrats don't understand technology. I'll tell you that. We've did a lot of EPI basic conversations for a lot of the regulators in the US, but in the case of financial data exchange, we're building the truck with the industry, right? So from a data format perspective, it's that connectivity piece, while also wondering on the security and auth side. But then the payload is really important too. So it's not just conformance with the data structure, it's also the completeness of the data that's being exchanged. And how do you ensure that those are actually the same regardless of the institution that's exchanging them? User experience is really important here, especially from a privacy and consent perspective. We also have principles around data minimization. So you should only be providing the minimum data that's necessary for the use case that's being consented to. But dashboards are really critical so that the end user knows what data is being shared with whom, for how long, how do they actually have the ability to revoke that? Because again, the control should be in the end user's possession. But at the end of the day, sometimes how do we ensure we're safe and sound? And that's the role of regulators. And while the industry's done a lot of tremendous great work, there are still some unanswered questions, and that's where we were hoping that some of the regulatory landscape would evolve to help us solve for that. But that's where we're here, right? With both FDX and OIDF, we're trying to figure out how we work with industry to create some more standardization when it comes to privacy and security, and really hoping that all the actual implementers can all build off of one core set of standards.
Yeah, definitely. And I mean, it's very clear to us all now that FDX and OIDF are very complementary to each other. FDX do the data side and a lot of the stuff that needs to be specific to the market. OIDF, we come up with a security standard. We get it to do the formal analysis of it. We produce conformance testing tools for it, and then FDX can pick that up, and they've got a nice standard that lots of vendors have implemented. It's a well-known property, and they just run with it, hopefully. And maybe we'll even see the regulator say that you should actually have a security standard in the USA, but we'll see. Yeah, politics is fun.
Yeah, I mean, at the core of it, FDX, like I alluded to a moment ago, was founded 5 years ago by industry. There was no government entity saying this must be accomplished. So the mission today is the same as it was 5 years ago, was that really common interoperable technical standard to facilitate data exchange for consumers. And the goal is full interoperability. We don't have full interoperability today in 2024. There is a lot of different versions of the FDX API in production, but there's flavors of it, I guess somewhat similar to OAuth, right? There's different flavors. So it's not fully interoperable, but we did some great work as far as accelerating with guidelines and best practices, and we're glad to say there's 76 million credential pairs in North America that are presently adopting the FDX API flavor. But there isn't a certifiable form of that adoption yet. And I know it's where FAPI's been very successful, is driving some conformance. FDX now is hoping to leverage some of the regulatory shifts to mandate what people's ability is when it comes to adhering to the data structures and the data format from a conformance perspective. And then how do we even test as far as the data elements, if they're present, say account balance, transaction history, the whole 9 yards of that, how does it actually comply?
Yeah, exactly. And I mean, what we've seen time and time again in ecosystems across the world is unless you actually test what a bank is doing on their production system is not compliant. It really is that simple. If you don't have that kind of independence testing, there's always something that either accidentally or sometimes non-accidentally sneaks into production, and you don't end up with interoperability, or there's a flaw in the security or something. And
right.
Yeah, and the same with the data standard. Standards are easy to implement, but they're also hard to implement. You just need that testing to actually help guide people along the right path, really. So a bit about the future. So again, I mean, we've already hinted a bit about what the UK and the EU did. So EU, not really interoperable because they didn't actually say there should only be a single technical standard. Looks like they're probably trying to fix that with PSD3 in one way or another, whereas the UK, which was at that time part of the EU, but actually decided to put some extra regulation in place, did say we're going to have a single standard in the UK. The USA, for some reasons, the regulators seem to think standards should compete. So if we get another one, it's going to be interesting to see how that actually plays out.
I know you talk about UK and EU, but there's some really great use cases in Brazil, right?
Yeah.
In Australia, as far as different forces have merged together.
So again, Brazil, what we had was a very active regulator. They started much later than some of the other ecosystems like the EU, the UK and Australia, but they went from 0 to 60 very fast, and have actually now really leapfrogged the UK in terms of what they've done, even though they started like 4 or 5 years later than the UK did. So Brazil's a really good example, I think, of how a regulator can actually get things to happen really quickly if they want. Some of the banks might not express it in quite that way, because I think it's been quite a stressful time for some of the banks. But you can't please everyone all of the time.
No, for sure. And in the realm of data exchange, when it comes to the data elements themselves, we have like these, we call them, every committee and working group we have is chaired by a financial institution and a non-financial institution to ensure objectivity and balance across the ecosystem. But we now think of them more as ideologies, because at the end of the day, data providers, data recipients, banks do both. Think about Chase's recent announcement around their ability to take data that's coming into them to create new marketing tools for their customers, like their small business entities. So the flow of data is really interesting. So this is all market here, but we still have these really strong ideologies of, oh, you're a bank and you're trying to take my data. Well, I need your data and you're not being willing to share it in the proper format. So it's that still exists. So I think some of the rulemaking will help, but it requires a certain degree of collaboration.
Yeah.
And that's kind of really cool to see these UNs of sorts and financial services evolve.
Yeah, and I mean, the really big contrast between the EU and the USA is obviously in the EU we have GDPR, and it's very clear that a user's data belongs to the user, and that's just not the case in the USA, right?
No.
It's feels weird to me, to be honest.
Bank execs will argue all the time that the data created on my system is proprietary to me. I think some are acknowledging more so like account balance and transactions, okay, maybe. But APRs and rewards and all these other things, those are proprietary to their business models. And there's a lot still to be ironed out over time. But I think as we think about where's next, what's open banking, there was a slide that Joseph alluded to at the beginning, which is there's this trajectory. In an aspirational state, this disparate system of screen scraping and things being hodgepodge together is not scalable forever. And that's why we've seen different paces of adoption of open banking across the world. But there is this concept of open banking going into open finance. So the UK is a great example of open banking. It's very specific account types, current accounts and savings accounts, but doesn't touch others. Yeah. But who has a mortgage here or an auto loan or other things? Like your financial world is greater than just a deposit account. So I think open finance is happening, and there's this really strong promise of open data where it's across different ecosystems. It's not just the financial world. It's energy, it's telecommunication. So at least in the FDX world, we've been trying to build from a data element perspective with our data library into things outside traditional banking. And it's done based on prioritization and RFC from membership, so the ecosystem. And the areas that are kind of newer here that's not necessarily in other jurisdictions is payroll. So we have payroll aggregators and payroll providers, say ADP and Paychex, who are actually starting to create ways from a data exchange there, because right now it's all proprietary in that world. We have corporate and treasury management, another place around the world that's not occurring. But as you think about commercial entities and the antiquities of the systems that they presently have with their ERP systems and other things, like we actually have a robust data library forming there. So as much as regulation helps, it can sometimes inhibit. So where do you find that appropriate balance? I think that's the thing that I'm really trying to figure out. But hopefully we'll navigate the next few years in North America to find that right space.
Yeah, I mean, I think the regulators all around the world have struggled with that balance, and some of it comes down to long set behaviours of individuals. That there are things that governments know they can't enforce on people in some jurisdictions, but work fine in other jurisdictions.
Very true.
So yeah, I mean, I think we covered this a bit already, but collaborating is key. If you want a successful ecosystem, you need everybody that's in the ecosystem to be coming and providing the input into the standards and telling us what doesn't work. And you never get these standards 100% right first time. You need the feedback of people that actually try and use them, whether they're from the new startup that's still in a garage and is just trying to get data from a bank to the big aggregators. This system needs to work for everyone, and it only works if everybody collaborates and shares how things are and aren't working.
Well, I can think about our history where you'd have someone from a really big aggregator accusing a really big bank of something that was illegal, right? So we won't give details here, but there was a lot of distrust, and now we are 5 years later, and it's only gotten to this point. So the success there from an FDX perspective, I alluded to that 76 million before. That's huge. It's actually larger than. Now, this isn't all publicly available. Not every ecosystem discloses how many of their consumers are using open banking APIs. But this market-driven force is larger than all the other jurisdictions around the world. And it was without regulatory interference. Now, we haven't solved it, right? There's no certification. It's not perfectly standardized. So there's a lot of caveats in there. But that's an example of where if you get the people swarming around a common problem, and you have to find that bare minimum space. But it sounds so cliche to say it, but collaboration truly is key. And I think that's where standard-setting bodies have been able to be successful.
Yeah, definitely. So key takeaways. Regulation is coming. North America and Canada, you are going to get open banking, we think. Yeah, you can never quite tell what governments are doing, especially with elections looming. The standard-setting bodies are definitely going to play a key role. Both regulators have said that. Said it in slightly different ways, but again, different cultures in the two countries. And yeah, please do collaborate with us. And yeah, any questions? I think we have a couple of minutes to go. Yes, please.
Steve Hannaford from Consulting Period. So in the UK, and probably knows other markets with open banking, there's like a directory function which links to then the certification of the participants that have been regulated. So do you think would that be the same?
I would say Canada, most likely, yes.
So the question was, in the UK, there's an open banking directory that lists both the banks and the relying party participants, and will we see something like that in the US and Canada?
So I'll get the easy answer is yes. They talk about accreditation versus certification, and accreditation is kind of this three-legged stool where do you have permission to actually participate? So like the directory or registry, what's the insurance and risk pieces of it, and then what's the technical component? And Canada has signaled that many times over the past couple of years. The US, not so much. There is some loose references to having things publicly available, but they have a lot of questions in their proposed rule to the industry, like what should we do? So they don't have a view yet. So will the final rule have more that's likely to drop this fall? Maybe. From FDX's point of view, we have a nascent registry where we want all participants, regardless of a data provider or a third party, where you have your information, your LEI number, maybe even some basic performance things when it comes to uptime and scheduled maintenance windows. Just got to get the buy-in. And will the buy-in exist without the government mandate?
Any other questions? Yeah, I'm here.
So you talked about standardized data formats. The examples you gave were mainly about the financial data. What about identity data specifically as it relates to partnerships? Say one platform trying to deprovision identity with another. Are those components also involved in the communications discussion?
Yeah, so the question was essentially we've talked a lot about the standardization of the data formats, but what about the identity formats and passing those around? Good question. I mean, is identity in scope of 1033?
It is not.
And it's not in scope in the UK or the EU really. You can get the identity of the account holder via an API, but that's not necessarily the person that actually logged in and authorized the access. So it's an area. Certainly we're seeing other ecosystems pop up. So for example, in Australia, they've got a market-led ecosystem that is sharing identity information. So you can get a verified ID token with evidence as to how the bank actually verified the user's name and date of birth and so on like that. Yep, I think we have time for one last question. Okay, maybe over here, sorry.
What is the expected date for the rules to be fully published?
So what is the date for the rules to be published?
US is fall of 2024. So the tea leaves basically say Chopra, who's the director of the CFPB, loves to go to Money 2020. He likes a good show. So a lot of people are thinking the last week of October is most likely the case. And then in Canada, their legislation is slated to also be finalized for their final reading in the fall as well.
Cool. So yeah, I think we're at time. So thank you very much,
everyone.
everyone. Thank you. Yeah.